Did I start something? All right. So yes, the euro is very weak. So the next one we're going to look at, but if we took the, you are right with regards to the euro, but I always want you to go through the process the same way as we did in this chart when we do the strength and weakness. The weakest, the ones that did not have any positive reaction to this weakness in the US dollars, these are the ones, your first choices. The euro had some sort of a positive reaction, a couple of days up. You can see a couple of days. The Swiss had a couple of days up. But the ones that didn't even poke their head exactly is the CAD, nothing. The pound, nothing. And look at the pound, even weaker than the CAD. And of course the Australian dollar. So we will do them in the same sequence. The first one would be the British pound, because it's the weakest so far, then the Canadian, and you always keep that sequence, and not because it is a way that keeps you consistent. If you always do the same things in the same fashion, in the same way, consistently, you can become consistent and you can decide what are you going to be buying or selling, and therefore you can gain the reward, and you know what you're doing right and what you're doing wrong. Okay, so the first one we're going to look at primarily is the pound. This is the numbers for the pounds from last week. We were planning to go short from 156. That was the short from last week. Below 156.60. It is now at 153.50. So you have 300 pips on that move from last Friday, even though you had, we gave back. It came all the way down to the 152.72, and this is what I want you to see, guys. This is what I believe is the magnificence of what we do here, and identifying the structure point. For the market to come to a structural point and it stops right there, and it bounces, it snaps back, whether it's a Friday, whether it is in anticipation of the Jubilee or whatever it is, that these things that happen in the market does not happen, it's not coincidental. It doesn't happen as a coincidence. It happens for a reason, and the reason is that people identify these price points and they act upon it. Therefore, when you correctly identify the price points, and then you get the validation that the market does acknowledge these price points, does identify these price points, and does react to them, then you get the confirmation that you're doing things the right way, and you should also follow and take action at or around these points. So this will remain, the 152.72 will remain our structure short point. We are now at 153.60. If you look at the weekly chart, this thing is sitting, there is your structure now, the 152.72. You can see that this has been now a structure all the way back from October 2011. It came back and tested, and right now this is the third time in the span of close to 8 months it comes to the 152.72, and it's trying to break it. So if this baby breaks the 152.72, and it should, your next move down should be towards the 140. I don't know, it's not the 147, but your next push down is towards the 148.74, 48.47. That is going to be your next price point. 148.44. This is a major historical low. This is a major structural point because that was the beginning of the move or the change in trend, because before that the market was declining and coming down. That was the bottom of a bear market, and that was the beginning of 2001 when the trend changed to the upside. The 148.44 or 148.47, it depends on whatever platform you have, but that is the point. That was the beginning of that was your structure point and the beginning of the trend change to the upside in the pound. And we are back at it right now. This is where we are at, and if we do break below the 152.72, the next stop is going to be that structural point at 148.44. Therefore, if that sucker goes below the 152, you want to be short the pound and you want to stay short the pound, because the next move now is going to, it should take us all the way down towards the 152, the 148.44. So just looking at our charts, we always have to do a what if scenario. Where would we buy and where would we sell? The trend is to the downside. Everything is pointing down. All what we have here is a pause, a sideways pause. There is no reason for us to buy. We can consider that this point here may be a weak structural intraday failure to the upside. So therefore we can, if we're day trading, we can do some buying over here above the 154.15. And if I do buy it over here, I want this thing to explode. I'm not going to give it, because if that's a structural failure, it has to behave as a structural failure. This means that all the buy stops should be triggered and fly to the upside. So I'm not going to give it too much room. If it breaks above this, I want this thing to fly. So my stop is going to be pretty much, I'm going to put it right there, because I'm not going to give it too much room. So my stop is somewhere around 153.90. So about 25 pips or 30 pips on that trade. But of course, since the trend is down, I'm looking for this thing to continue to the downside, and this is a major gift. So I will go short below the 153.40. So my short is over here, right below the 154.53.40. And if I do take it short over here, I want to give it room to work. I want this thing to continue to the downside. So therefore, I'm going to give it a little bit of a wider stop, and I'm going to use the 153.90 as my stop. So the 153.90 is going to be my stop whether I am long or short. Either way, the 153.90 is my stop. On the downside, the stop is bigger. I'm risking about 50 pips on that trade, because it's, again, I'm looking for an explosive move to the downside. On the upside, because it's a counter trend move, I am not going to give it much room. When you're in the direction of the trend, you want to give it some breathing room. When it's in a counter trend, you don't want to give it any room. So this is how we are going to put the, we're going to buy it above, what is the numbers here? We're buying above 154.15. So my buy is above 154.15. 1:15. My stop is 1:53, 1.5390. My short is going to be below 1:53.41, and I'm using also the 1:53.90 as my stop. For my structural points, my structural short point is the 152.72, and this is a major structure point. On the upside, the next structure point is way up there, which is the 157.82. So for the pound, these are how I'm going to be trading. I'm buying above 154.15. If I do, I have a structural long point above it at 157.80, so it should give me like 300 pips to the upside. My stop is 153.90. On the short side, I'm going to go short below 153.41. My stop is still the same, 153.90. And I'm looking at the major historical structure low, the Big Daddy, at 152.72. And I want this 152.72, guys, is like a magnet. If it breaks below the day of today, which is the 153.40, it will pull it. This is like a magnet, pulls the prices, and you can see how it pulled it on Friday. It will happen the same thing again if it trades below the low of the previous day. Okay, that is the pound.